Via telephone, Financial Phil from Ameriprise Financial and the Mirius Group of Financial Advisors. Hello, Phillip.
Good morning, guys. How are you all?
We are well, and yourself, Phil?
I am living the dream, Rob.
Well, that's good to know. Good to hear. What was your schedule like last week, Phil? Were you in the office every day but Thursday, or did you have a few to yourself?
I was in the office every day but Thursday and Friday. We take Good Friday off as well. We're available by phone if anyone needs money because the markets are open half day on Friday. So we're available but not in the office on Good Friday. So we had Thursday and Friday off, and I missed my buddy Rob, our morning conversations. I felt empty all week long. I felt empty. Like I woke up, even though I got extra sleep, and something just wasn't quite right, and that's because I didn't have my morning conversation with Rob.
You missed
me straight.
You see, I like to call it your 6:30 therapy session, Phil, where you can vent about the Steelers and anything else that's bothering you that morning.
Yeah, I think I'm about done venting about the Steelers. I think I'm vented out. That wasn't a surprise and at all. It's kind of sad. I know they're 6-6 and blah blah blah, but that was a pitiful effort from the Steelers. It's the coaching staff, players, all alike. It was a pitiful effort by the Steelers yesterday.
Read a post by County Commissioner John Hardy, first post of the day. Said, "Man, I hope you guys are going to talk about crybaby Cam Hayward. He need me in my belly. Come on, man, toughen up." LOL. That was from Mr. Hardy there this morning. Now, what he's talking about is if you've watched the game yesterday, if you did, I'm sorry. There was an incident between Cam Hayward and Josh Allen, the Bills quarterback, in which Hayward and Allen were woofing back at each other. And apparently after the game, Hayward said that when they were in a pile after a tackle, that Josh Allen kneed him in the stomach, I guess when he was getting up. And that upset Cam Hayward, obviously. And Josh Allen said it was the only way I could get up out of the pile was with my knee. So, Phil, as a former football player, and I played the game as well, a lot of stuff goes on in those piles. What's the most interesting thing you ever did or happened to you during one of those pile-ups, Phil, back in your playing days?
Listen, I am not answering that question on air. Just let me
come on, Phil.
Tell my daughters what I'd done to people in those piles and what was done to me. It was it's inappropriate at best.
Have you ever intentionally broken someone's bone?
I have tried. I don't know that I actually broke something, but I have tried.
That was just last week. He's talking about when you played football.
There's a lot of squeezing, grabbing, pinching, twisting, pulling in those piles. So when the stripes can't see you, bad things go on down there. It's a dark place in those piles. So I'll just leave it at that. But there's some things that I'm not necessarily proud of that I've done. And by the way, that was done to me. And that even happened in practice. We get down in the bottom of the practice, and I'd have my roommate trying to gouge my eyes out. Or it's like, what is going on, man? We're on the same team. Look up, we live together. Like, you're my roommate. What's going on? But there's some bad things going on in those piles, man.
My guess is you weren't cleaning the kitchen or the bathroom properly, Phil. You got to flush.
Well, in the olden days, these kids with these nice dorms that they have now, we had like prison bathrooms. The whole floor would share, 8 showers and 8 toilets and 8 sinks, and that was also a dark place. Those dorm bathrooms.
Yeah, and the quarterback called out his wide receivers after the game. Said, "Come on, folks, you're letting me down.
Get open."
Yeah, that was, I don't know. It's just the offense, the defense. There was nothing to really be excited about. And, to watch a team run the same play over and over and over and get the same result each and every time, it's kind of disappointing. But can't say that I was surprised at all that the outcome was what it was. That's been the Steelers this year, and I think it's time for major changes in an organization. They've got some young, good players on the team, but there's too many players that can't cut it, bad, predictable schemes. When I'm sitting there watching it, I'm just a casual fan at this point, and I know exactly what they're going to do exactly. That's not a good thing. That's not a good thing at all. And it looks like the defense knows what they're going to do too. Just not a good time right now to be a Steeler fan. But we'll be back. We'll be back someday. They'll probably. I was telling Kyler they'll give us hope next week. They'll do something. They'll beat the Ravens 34-10, and we'll start thinking like, ooh, if we play like that, and then they'll lose to the Browns. Something like that will happen.
I don't think it's going to change until Mike Tomlin starts coaching someplace else. I think he's worn out his time in Pittsburgh. He's been stale for a good 7-8 years, and it's just time to move on.
I agree. But I appreciate his service, but I agree.
His coaching staffs have been terrible since he let Dick LeBeau go on defense and Bruce Arians on offense.
But one of the standards is you generally expect the Steelers to be pretty good on defense. They were not yesterday.
Yep.
They haven't been all season. They're one of the worst ranked defenses in the
all season.
league.
Yeah, they haven't been all season. And as the announcers made sure that we knew, Buffalo broke a rushing record in Pittsburgh. Kind of early in the fourth quarter, honestly, but broke a record on them. And then they have the nerve to play Renegade. Like, come on, man. You can't play Renegade with this defense. This is what we were talking about. Like, they booed Renegade. They didn't necessarily boo Renegade. They booed that you play it as they're breaking rushing records on you. They're running the ball directly down your throat, and you play Renegade.
Well, they booed because they booed because Renegade broke up the Fire Tomlin chant that was going around the stadium. And then they played Renegade to drown it out.
It's a bad day.
It was a terrible day. But I have to say, one thing about this era is that I'm like a lobotomized fan. I watch very dispassionately. I don't even get upset anymore. I just watch it and just take the beating like a man, Phil.
Yeah, because I kind of,
a brain dead man.
My dad, anytime I would make the same mistake over and over, my dad would look at me and say, "You know the definition of stupid, don't you, son?" And it seems to be what they do. They just keep doing the same thing over and over and expect different results, and it doesn't work that way.
I want to say, from my perspective as a former player, I never, that I remember, did anything illegal or dirty in a pile-up to anybody else.
I'm sure.
However, I do remember playing one team specifically that did. And I remember getting up out of a pile for like the 10th time, and like their whole coaching staff was in on it. So I think they were just a bad, dirty coaching staff. And I remember delivering a message behind my back to the entire sideline, and they were a little bit shocked. Have to be honest. At the end of the game, when it was time to do the handshake line, I sat on the bench, and the coach said, "Come on, let's go." And I said, "I'm not going out there to shake their hands. But they're all dirty players. I don't respect any of them. I'm certainly not going to say good game to them." He said, "Okay."
Looking on the bright side, the other side, your high school team's been doing pretty good. You're in the finals coming this coming week, are you not?
Third time in 4 years.
Yes, I read about that, Rob. Congratulations.
Yeah. Thank you.
Yeah, so
going to Annapolis.
There are good sports stories out there. Shepherd's soccer team made the Sweet 16.
Mm-hmm.
Shepherd's volleyball team's headed off this week for the NCAA tournament. They're the 5 seed in the Atlantic region. The Shepherd's football team finished up strong. Martinsburg's back in the state championship. We got to look at the bright side of things here, guys.
Yeah,
it's not just on the still. Our local sports are doing great.
And Josh Crummett, who's the starting center for Shepherd, I think he was first team all conference. Someone said he made some All-American team too. He's an Oakdale football player, and he came back Thanksgiving morning for practice and delivered a fire 'em up speech to the team, which was pretty cool.
Paid off.
So Crummett's one of my favorite players ever. I keep trying to get him on the show, but I think he's microphone shy. Phil, what kind of a month was it for November for stocks?
It was a mixed month, and we saw something interesting in November. We used that word, and we kind of brought this up this morning, the rotation word, and we saw that with the S&P Dow and NASDAQ, where the NASDAQ was negative, finished the month negative, S&P and Dow finished positive, and I kind of see that as a good sign, and that's been kind of the path that our markets have taken, where the NASDAQ takes off, the tech heavy indices leads all other indices, and then there's a pause, and the others catch up a little bit. Now what's the next step? And we had talked this morning about there was some, after the earnings season had come out, we probably should more focus on earnings season because I think that's what matters most. But as the companies in the S&P 500 for the third quarter, their profits grew 13.4%. And I think that is relevant because we've got this fear that so many companies are overpriced. And that means some companies aren't overpriced or there's not overpriced. But as a whole, and this is why I stay diversified, the S&P 500, the profits grew 13.4%. 10-year average is 9.5. Now, the five-year average is a little better than that. But by and large, what that says is hey, we may not be as frothy as what we think we are because the company making money, and the growth.
Phil, you're cutting in and out there, Phil. You're cutting in and out there. You in a tough area? Yeah, you're still cutting in and out.
Uh-oh.
Yeah. Well, keep going there. That sounded okay when you said uh-oh.
Got me now?
Yeah, I do.
All right. Well, I just turned my Wi-Fi off, so sorry about that. I said some brilliant things, but at the end of the day, the S&P 500 had the company, the growth of the average growth in S&P 500, 13.4%. As to say, the growth that we have had in the S&P so far this year has been justified because of that growth, and it's on path and even beating the 10-year average that we've seen.
All right, very good. So this morning, as I look at the markets, though, I see a lot of negativity, and that's as we start off the month of December. Why is that? Any idea?
That's a good question. It's confusing because as we talk about Santa Claus rallies, and that's always a question this time of year, will we get the Santa Claus rally for December? December is typically a pretty good month for our markets. Well, we spent, as consumers, we spent so much more. I think it was around 9%. I think that's the number. Don't hold me to that. More than what we did last year. So we get consumer confidence numbers one week that tells us our consumers aren't confident, but the proof in the pudding is that we're at least, well, we may not be confident, but we're at least willing to spend money, and that's what companies care about. If consumers spend money, then the companies will make money, and that is a great sign. In my opinion, that is a great sign for the stock. It may not be a great sign for the economy, and I know there's out there, people are out there saying, hey, they're just building up credit card debt and borrowing to spend for Christmas. I'm not going to dispute that at all. That's not really advice that we would give to our clients. But the fact is that consumers are spending money, and we've seen that over all these days we got small business and Black Friday and Cyber Monday and all these fun things. We are spending money at a clip more than what we were last year. That tells me that consumers aren't as negative as what the reports tell us.
Now, I know you don't deal in cryptocurrencies, generally speaking. They had quite the run-up after Trump's election, and right now they're having quite the sell-off. And this morning there's a huge sell-off going on. Bitcoin is down 6%, Solana 8%, Ether 7.3%. It looks pretty nasty. Is there a particular reason why over the last month the floor has just kind of fallen out of cryptocurrency and Bitcoin?
I have no idea, and I would suspect that you would say the same thing with stock markets when they run up. We know that when stock markets have a huge run-up, you start to get antsy, and people want to go ahead and take gains. I wonder if the same thing, I'm sure that it does, happens in the crypto markets. If you're looking at a boatload of gains and you're setting on those gains, it may be time to pay the piper and go ahead and deal with the taxes on that and sell it and take your gains and move on. I would assume that's the same thing in the crypto market. And again, with the stock, we can look at that and see where is it selling in relationship to its intrinsic value, what's its outlook, and blah, 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 all these fun things that we use to determine whether or not you should purchase into a stock or an asset class. I don't know what they use for cryptocurrency. It's just a feeling that people have, and you get lucky sometimes, and sometimes you don't. But there has been a major sell-off on crypto. We've always thought that there's all these headwinds that we don't know what they are for cryptocurrency, and the one that we do know what they are is regulation, is government regulation. And I don't think we've seen that yet in the United States, but rewind back a few years and we saw it in China, and crypto dropped from like 66,000 per Bitcoin down to around 16 to 17,000, and most of that was because of regulation from China. If we do that here in the United States, I imagine that would have an impact on it, but that didn't happen. So my guess is people are just taking their gains and getting their money off the table.
Mr. Stubblefield.
Good morning, Phil. If I was following the market, why would I go to any sector other than AI? Seems like AI drives in any direction. AI encompasses the whole market. In this day and time, why would I look at anything other than AI?
Well, one reason would be last month. So, and we continue to push the diversification idea, and it's a hard sell sometimes because AI and technology has made the majority of the money and driven, as you just said, all the other asset classes. But at some point, there's going to be a rotation, and we saw some of that in November, where S&P and Dow were up 3%. I think the NASDAQ was down 1.5%, so a 4.5% divergence in just 1 month. That's pretty drastic for just 1 month. So at some point, we know that the Procter & Gamble's and the consumer staple type companies and the healthcares, although they're using artificial intelligence to increase their profitability, they're not seen as an artificial intelligence company per se. So therefore, you do still need some of that in your portfolio to even out that risk, so you're not all in one asset class. We've all heard the saying, don't put all your eggs in one basket. Well, that's kind of the saying we're going to say here as well. Don't put all of your eggs in the technology or AI basket. You can if you're 20, if you want, and you've got 50 years to go and you're in your 401k. Yeah, you could do that. You could say, look, let's just throw it into an exchange-traded fund or an NVIDIA-type company or whatever. Most 401ks don't allow you to buy stock, but you can purchase something like that and let it ride for 50 years. Yeah, sure, go ahead. I wouldn't dispute that too much. But if you're in the middle of your working life or in retirement, although you do still need some of that technology, artificial intelligence exposure, you don't want it all to be that, all of your eggs in one basket, because if and when it fails or it pulls back, you're going to experience all that, and you won't have any money in the stuff that would start to do well because of it.
But isn't AI somewhat of a surrogate for the cryptocurrency? For those individuals that see cryptocurrency as way, way too risky, they don't know anything about it, but they watch the huge gains, so they take that one step back, and that's going to AI.
I think you've got a point there where there's a relationship between the investor that goes heavy into crypto and to artificial intelligence, but there's no real connection between artificial intelligence and cryptocurrency. But I think it is the same people or the same investor that says, hey, I understand this stuff. I understand artificial intelligence and how it works, and it is not as aggressive as cryptocurrency or as volatile. And I can look at that intrinsic value and how the companies are performing and what the CEOs tell us during their earnings call and invest based off of that. So it is the same type of person that is involved in it, but there's no relationship between the two assets or the two investments per se of artificial intelligence and cryptocurrency. But I do think it is the same type of person that relies heavily on those.
The noise you hear in the background.
You don't hear the noise because I had the mics down.
Oh, you did? Okay.
Yes, I was unwrapping Mary's cookie so John doesn't yell at me during the next break.
No, but I was offering you a knife to help with the...
Are you just having a snack in the middle of my call? We haven't talked in a week, snacking it up.
The eyes had already glazed over, Phil, so it's okay.
No, you were fine. I, as the host, I have to prepare always for the next thing. So while you were answering the question, I was preparing for the next thing, which was Gilstrap's stomach rumbling.
A host is a host. Right?
That's what I do.
So
I host.
I have a question for you, Phil. I'm looking at the Wall Street Journal and at the various indices, they have their 52-week range, and the Dow. This isn't like from 52 weeks ago. This is from low to where we are today. The Dow in April was 36.6. It's now 48.4. S&P has gone from 4,835 to 6,920. NASDAQ 14.7 to 24,000. In spite of all of the stuff, all the ups and downs and the crashes on this week and the recovery on the next week and all that, this has been a pretty good year so far, right?
Sure has, yes. And it has been a good year, and especially if you were brave enough / smart enough or lucky enough to have thrown money into the markets. And pick your indice. It doesn't matter. We know that NASDAQ has done better. Pick your indice. But on the tariff tantrum, as I've named it, that we had in April, from the bottom or the end of those 3 days moving forward has been extremely well. Now, we're cheating a little bit because we're starting at a bottom. But those 3 days in April were awful. And they rival any of the worst 3 days we've ever had consecutively. But then just as quickly as that happened, our investors' strength, if you will, and our willingness to buy into that stuff kind of created a bottom. And I know the headlines, we backed off of some of the tariffs and so forth, and our markets took off. But overall, even if we started from January the 1st, it has been a good year. With all the headwinds that we've had, it has been a good year. We don't hear about that much. We don't hear about that often. You'll hear on the nightly news, Lester Holt will tell us how much money 401k investors had lost throughout a bad day or a bad week in our markets, but we rarely hear how much they made after a good week or a good month or a good quarter. Rarely do we hear that side of it. We just hear the negative side.
If I did my math right on this, from that bad day to today, the Dow, if you had invested, if you're an index investor and you had invested on that during that week, you'd have made 32% on the Dow, 43% on the S&P, and 62% on the NASDAQ.
Yep, not disputing that. And I didn't do the math myself, but that sounds about right. Those 3 days were awful. But like I said, if you were lucky enough or brave enough. But what triggers someone to do that? If we rewound back to April, I don't know if there's too many people that were thinking at the end of those 3 days, now's a good time to buy into this. We were all fearful of what tariffs would do, but over the last 6-7 months, I just said 6-7, I've been trying not to do that. Over the past few months, that's kind of faded away in the background in our markets and companies, as we just referenced with 13.4% growth from the S&P, have done extremely well.
And I think you speak the absolute truth there, that it's very difficult to invest into those times. And what was it your dad said to you? What's the definition of stupid? Because it always goes this way. It was in 2008. It was the same thing. You had the panic and, oh my God, people were pulling money out of the markets. And I'm not suggesting that I'm any different in all of this, but the history says that after that awful day, if you have any cash left, it's really time to pour it in.
Or rebalance. We wouldn't want to take an investor that's a 50-50 mix and throw them 100% equity. But it's also a good time to look at a rebalance, which is a small turn into the market. But if you're 50-50, which is 50% stocks, 50% bonds, cash, or bond replacements, if that causes you to switch from 50-50 to 40-60, it's a good time to make it 50-50 again. So to open up your portfolio, your 401k, if you're doing it on your own, and try to get back to that asset allocation that you had before that fall, that's another way to buy back into the market.
Yeah, Phil, as you write your book, Investment for Dummies, it's awful easy to say there's a historical trend. We can't expect this to happen. But are there a few reasons we have seen this phenomenal growth in the last few months?
It really does boil down to consumer strength. And, on one hand, we can say it's strength, but I would say consumer willingness to spend money in the face of all the fears that we have with job layoffs and the government shutdowns and consumer confidence numbers come back in. Proof is in the pudding, guys. And when we look at heading into this spending season, this holiday season, Americans have told us they're still going to spend money no matter what the headlines are, no matter what the fear is, whether they're spending it or borrowing. It doesn't really matter, to Walmart. They don't care if you're putting on a credit card or using cash or debit card. At the end of the day, our willingness to still purchase has been extremely strong and it's propped these markets up.
Bill, how do we reach you for more information today, sir?
You can reach us at 304-263-4343 or stop by and see us with an appointment at 1270 Winchester Avenue right here in Martinsburg.
Thank you, Phil. Have a great day.
Thank you, guys. Have a good one.